Thank you, Scott.
Hello. Hey guys.
Steve, Monday greetings, sir. How was your weekend?
Good. That's a nice looking mask you got there.
Yeah, I thought it, might be a little over at the top, but hey, it is Halloween, so I'll have to cover up my luscious
Scary.
gray hair. Happy Halloween, everybody.
Yep.
Happy Halloween. It's very strange to think that November is upon us, and before you know it, the new year will be upon us. It seems like this year just kind of went poof. Um, but I guess as we get older, time compresses and the years get shorter. That's my experience. But in any case, welcome to another edition of the Office Hours webinar with myself and Steve. Before we get rolling here, just want to go ahead and make the lawyers happy. Just want to make sure that everybody here pretty much is aware, but we just like to drive this home to be legally compliant, that everything we share with you guys is for educational purposes, so please don't take what we say here as a recommendation to buy or sell securities or anything else. There are plenty of registered investment advisors, Series 7 brokers that you can access. If you need that type of service, please seek out a licensed individual. All right. So for a kind of a boring day in the market, we'll get to the analysis here shortly. As always, we'll let Steve start everything off with his market analysis of where the market is. Of course, we all know where it is already, but we'll get to that soon enough. I just want to remind everybody that not only do we have flagship technology that you won't find anywhere else, but we have created a vibrant trading community around that technology, which is really what makes us unique in the space. We've got this webinar every Monday with myself and Steve. On Wednesdays, we have two different ones. We have the Q&A webinar with Dan and Brad, and then, of course, Steve heads up the Trade of the Week webinars. We round everything out with Andy's Trading Studio on Thursdays, and I ride shotgun with Andy. So, we've got 4 different webinars, and we've got 4 different personalities to bring you the rich content that Trade Ideas generates every day. So come one, come all, pick and choose as you see fit. But if you haven't been taking advantage of these webinars, you might want to check it out. All right, so moving right along. We got the itinerary loaded up today, so we'll do market recap, talk about where we are in the market, and then we'll follow up with Holly. We also have a couple of things that Steve is going to showcase later on in the webinar. The trade of the weeks that have been occurring, and a few what let's call out of the ordinary setups that Steve has identified that he will be sharing with you guys. And then, of course, even though pickings are slim right now, while we walk around in the swamp in our golf shoes until we get this election over with, that kind of feels like the trading the trading scene that we've been seeing here lately, especially when Steve shows you the inside day that we had today. Of course, you lived it, but then seeing how small it was helps even reiterate that further. So without further ado, Steve, I'm just going to go ahead and flip it back to you.
Sure.
And we'll get it rolling here.
All right. Okay, so I take it we can see my screen.
Yes, we can.
Here is the big stretched out version. And here is what Jamie is so affectionately referring to as the clump channel. I mean, it really can actually go back as far as this level, as far as I'm concerned, because it's just been a movement sideways, down movement, and then sideways, down movement, and then sideways. Really nothing more than just a big clumpy mess, which of course is an acronym for Clump and Trump. I think that's what the market's waiting for. Generally, I try not to read too much into the fundamentals or the outskirts of what's going on out there. Obviously, black swans we can never account for. But this type of action is typical for November in terms of the volatility, the long candles, the volatile candles. But it's directionless. We can't really seem to break down. Every time we seem to break down, the buyers step back in, as evidence here. And then I was not around last Friday for any webinars, but once again, you'll see attempt to move below that line and then close back up above that line. Today we're resting right again on this line with a very, very, very narrow range, which we'll highlight again later. It was, I think, an 80-cent spider's range, less than a $1 range, nothing going on, no volatility, no direction, just a lot of back and forth. So, until further notice, which I think very well could be a week from tomorrow or even the day after Wednesday, November 9th, November 10th, this market may start to change its tune a little bit from just the messy clump that we're in. We can't break through to the upside, and we can't break through to the downside. So, what does that mean for trading? Position trading is very hard to do right now and look for multiple days in a row. One day might just reverse right back on top of itself the next day and go negative on you. So the trading horizon is very short right now. It's no surprise that Holly has been in a risk-off mode for most of the days the last few weeks, as far as I can recall, because there just hasn't been that base rally from beginning to end. It's a lot of back and forth, a lot of chop one day and red the next day. So that's what we're stuck with. That's what we're into. If we take a look at the Qs, at one point back here, I was getting a little excited that the NASDAQ tech-heavy, tech-laden was about ready to maybe try and pull everybody else higher, but leadership did not manifest over there, because the very next day we've had some falling back into the range of itself. The Q kind of seems to have its own range here that we're falling back into. So what I thought could have been leadership a few days ago has fallen back into a dead zone here. The diamonds, for the Dow, that's a clump. If I've ever seen a clumpy range, no decision, something that's waiting for something to happen. The only thing I can think of is our elections, the IWM, which is the Russell 2000, interestingly showing some decay. So the small cap names are not hanging around for the clump. This is an interesting new development that I haven't really kind of talked about. The last few, the range that was pretty much set, it looks like, in the IWM or a Russell 2000 has broken. So what we're seeing here is a little bit of underbelly, underpinning, breaking under the surface in some of the smaller cap names just by looking at the IWM. So interesting to note that as well.
That is very interesting.
Yeah. I mean, I just kind of caught on to this. The four ETFs I like to keep an eye on are the small caps, like here, the Russell, the Dow, showing us nothing. The tech-laden Qs, where the technology is and where the basic growth has occurred, for the most part, the leadership over the last few years, and then, of course, the spiders, S&P 500, with a lot more industrial and financial components in there. So, that's what we've got to go on until I see the S&Ps break below and convincingly stay and close below this yellow line, something we have not been able to see. This yellow line really, for the most part, has been holding up, but we are flirting with it and testing with it here again. So if we were to come in tomorrow and at the end of the day we've got a big red candle down, we're closed down in this area, then all of a sudden we've got something to talk about. We've broken down out of our clump range. But for now, we are still stuck there. So back to you, James.
Indeed. So, as Steve has illustrated, and as everyone can see on this chart, we are in the clump range, and we'll be in the clump range probably until the good old election day has come to pass. Then will we break up or will we break down? Who knows? We might even stay in the clump range after the election, because who knows?
I like what you did there. Uncertainty.
Right. So, it brings up a good point. Why are we focusing so much on Holly? Why are we seeing so much statistical probability? Because we have expectations. And what you're basing your expectations on is pretty important. Now, while we're in the clump range, my expectations are pretty low. And, of course, this doesn't have today on there, but we'd be inside this bar as well. But, if we can just use some basic common core knowledge and go, okay, we've been in this range. We probably will stay in this range. And what's the big overlying macro event? It's the election. So the expectations are there. We're probably going to stay in the range. And, of course, today, not only did we stay inside of this range, but we stayed inside of Friday, big time. All right, as Steve was illustrating, less than a 1-point range in the SPY, but we still went from all the way at the top to all the way to the bottom, which creates the illusion of some opportunity. But that's the big reason why we use statistics is to try to remove uncertainty from our trading routine. And if we come in with realistic expectations and try to remove as much uncertainty as we can, then that's about all anybody can hope to do when we're talking about trading the markets on a daily basis. All right, that's a very good launching pad for any trading day. So let's do this. We're going to go ahead and get into the Holly trades. Let me just minimize this. And first we're going to take a look at our strategy panel. So I was taking a look at this over the weekend, and once again, a pretty full hopper today. 14 strategies yet again. That kind of seems like the magic number as of late. There's been several sessions last week where we also had 14 strategies. Of course, they're not always the same. Some will go away and new ones will appear. But just to kind of refresh everybody's memory, especially for those of you who are in the room today that are not Trade Ideas subscribers at all. Now what you're seeing here is the AI panel, Holly's AI strategy panel. These are all of the strategies that after all of the analysis was done, after all of the tick data was updated into our database as of the closed Friday, put all that information in, and then we have a core of about 45 base strategies. After the information is all loaded up, Holly will then go about retesting all of those strategies, backtesting them over and over again, trying to improve upon them. When it's all said and done, there's a score issued, and only those strategies that meet the minimum scoring requirements show up on the starting team for the next session. So 14 strats today, 3 of them, as you can see, were shorts, and all the rest were long. So we had 11 long strategies in there today. And we can see on support generated the most alpha today, about $1.45 on 4 trades. Now what we're seeing right here is how the strategy performed today. Over here, we see expectations coming into the session based on a 40-day backtest. So, interestingly enough, it was kind of like, these guys were operating at 50% right in the middle, and then on the opposite extremes, we had 0% success on these guys, but we evened it out with 100% success on these guys. So, from a statistical standpoint, everything looked pretty smooth out today. And when we look at, now that we have today folded in here, talk about inside day. Not only inside, but right smack dab in the middle almost of the previous day's range. So when we see a day like today, and of course we can see it bouncing around as the day progressed, not a whole lot of opportunity out there. Fast and furious, and if you missed it, it's one of those days where if you spent the day chasing your tail, hey, I'm in this, I got up a little bit, now I'm flat. So, long story short, a lot of people out there today talking about churn and, simply put, yeah, I made money against the market, but after commissions I was down slightly or break even. So, describe that type of scenario. So when we see Holly and her performance today, pretty much what we like to call a risk-off day, and we can see, beautiful little chart here. Even though we had this inside day here today, Holly gets in and starts initiating positions today. About 18 minutes into the market, we can see that's when the first trade was issued. And, everybody's heard Steve and Andy and I talk about a directional bias. Steve, I don't know what you think. This is kind of, it just wasn't as strong as, some of these days where, boom, a bevy of trades pops off in the same direction. Usually the time.
I really wasn't feeling it today. Yeah, for the directional bias, it just wasn't coming in.
Yeah, usually we all see it at the same time, and we'll all at the same time we'll be like, there it is. But, just wasn't feeling that the frequency of trades just wasn't enough during this little 7:05 to 7 o'clock time period. So there really wasn't a directional bias. Of course, looking back in retrospect, if we're looking at the intraday, I guess you could have thought for a brief moment, yeah, we have a directional bias, but then it turns on a dime, goes all the way back down, sets new lows again. So, when we get this whipsaw action, on that intraday range, it certainly does not make things easier. So if we look at the risk on chart, risk on $1.99 today versus risk off $1.06. As traders and human beings, we typically like this type of action. If we did go risk on today, we had to sit quite a few wiggles before we finally got to this point where she was able to maintain, the P&L above 0. So let's talk about the trades. And I'm sure there are those of you out there wondering, well, what exactly does this risk off and risk on mean? Well, allow me to elaborate. So what I've got here now is just the Alt Trades blotter. For those of you who are not familiar with how to spawn that, we just simply right-click in the AI panel, click on View All Trades, and then we get this guy to present himself. So if I stretch this out a little bit, just to make everything a little more conducive here, I'm going to sort by risk off. Now, what we typically like to showcase is on any given day, there are things that we call trade arounds, and then there are individual trades that we can showcase on you, the user. If you're interacting with Holly and taking positions here and there, when does it make sense to go, quote unquote, risk on a particular trade, even though we might notice Holly is exiting the trade, which brings up a very good point. If we all focus on the exit reason column here, this is where the exit reason will be shown to you. So we can see here, in the old days, and when I say the old days, I mean all the way back to last January, when Holly first came online, we had 3 reasons why she would get out of a trade. It was a stop loss, the profit target was hit, or the timed hold had been reached. And when I talk about a timed hold, if we look at the strategy panel, under the time stop, we can see the time period that each one of these strategies was designed around, the number of minutes to hold. Here we have an hour, 220 minutes, or we can have until a certain time of the day. So this is 2 hours before the close, since I'm on Pacific time. So stop loss, profit target, or time stop. What we realized initially is that leaving only those 3 components intact, Holly would let a winning trade turn into a losing trade. So we quickly had to teach her some advanced risk functionality. And that's when reduce risk and profit save came into the equation. So with profit save, there's no way that she's going to let a winning trade turn into a losing trade. And if she's been in the trade for quite some time and it's just not working and she's down, rather than let it go all the way and trigger the stop loss, she'll make a decision to go ahead and cut bait there, and hopefully resulting in a smaller loss than running the stop. Now, the interesting thing to point out is that we had 21 total trades here today. 15 of those trades were long, and then we had, 6 shorts? 1, 2, 3, 4, 5, 6. So definitely a long bias today. But the interesting thing to point out here is let's see, I'll just resort that one more time. There were only 2 out of 21 trades where the stop was hit. Now, as Steve and I were discussing, on a narrow range day, that's not so surprising. However, I know a lot of humans out there that trade today, and myself included, and out of 21 trades, only having 2 hit the stop loss is a pretty impressive feat in and of itself. So I'm going to resort by risk on one more time, and we're going to take a look at some of the highlights today. So first on the list is YRD. All right.
Love this call.
Many beautiful things about this trade. Number one, I've taken the liberty of already drawing the line straight across from the blue box here, and just everybody note, when I double click on Holly's trade blotter, not only does it populate the chart with that symbol, it puts the blue arrow right on the bar where the trade was generated, and the blue box corresponds with the price. Now the red box down here is going to be the stop loss, which obviously never even came into play here, but I'm going to go ahead and draw a line there as well. Now, from a bottom picking standpoint, Steve, it just doesn't get much prettier than what you see right here.
Your brain just isn't wired to want to step in and do that. And not only that, I mean, I want to point out there was a good 10 minutes where you could get a better price than Holly. You know, I have seen some trades on a breakout trade where certainly in some cases you might have a quick breakout and, hey, I didn't have time to log in and get that price. Well, these contrarian plays, not only do I love them because of their sheer contrarian nature, because that's what works in a market like this where you just can't get any direction. You got to start turning everything upside down. And it's hard to do it, like I said, with your own emotion and your own wiring system, but when you have an unemotional AI that jumps in and says, hey, statistics, love it right here. I'm going to take a chance. And my other point is, like I said, you had a good 10, 15, maybe, I don't know, 10, 12 minutes there to get a better price than Holly did. So it's not always the case where you can't get the same price Holly can. Sometimes you can get the better ones. Now, in the vein of continuing our discussion of trying to make the mantra zoom out and look left, where else does this trade come from? Daily chart. Look at that. Nice looking daily, putting in a little washout bottom after 2 days of pullback. Looks like a normal trend reverse, not a reversal, but a trend continuation to me. The day prior to yesterday was the higher of the low. And today gave you a wonderful chance to not chase the open like we're so wired to do with our lizard brains that we have, chase the herd. No, Holly says, hey, just hold on a second. You might get a second chance here. And then bam. What do you know? The price action comes back, dumps out all those early traders, and gives the contrarian traders a wonderful chance. I love every single trades that come out that Holly makes that are like this. Now, not all of them are like this. Some of them are going to be momentum buys. Some of them are going to be a pullback of a quarter point on a momentum bar. But when you see a trade that just makes sense on the daily chart and the intraday, and it's a contrarian play, look how much staying power that gives you. And again, I'm going to use that word staying power again a little later in the webinar when we talk about a couple other trades entries.
Absolutely, Steve. And, you know, we talk about this quite frequently. It's like, okay, number one, a lot of the times the trades that come from a statistical model won't look like what we want them to on the chart. And that's always been a sticking point. Now, that still happens. But there's also another side to that coin. And this is the perfect example here because, number one, let's not even look at the chart right now. Let's look at the strategy that provided the play. YRD on support. On support, coming into the session, that entry was weighted at 64.8% chance of success. So that's first and foremost. That's what you have to realize from the very beginning. Hey, this play, 64.8% chance of working today. That's huge. That's, you know, way above 50%. And let me refresh everybody's memory about how powerful slight statistical advantages are. That place called Las Vegas, where you can go spin that thing called a roulette wheel. Well, there's a 0 on the wheel, and there's also a double 0 on the wheel. Haven't you ever wondered why there's 0 and double 0? Because if there wasn't a double 0, you'd have a 50-50 chance of winning that game. And guess what? The casino would lose money. There would be no more roulette in the casino because they would not have the advantage anymore. And that's just slightly over 50% on the long term. Here we are on support, generating a very generous 64.8%. Maybe we don't take it with Holly right here. We're like, you know. That's why I drew this next little line, you know, looking at coming down to the, you know, and we could even pull it down further, or even pull it down here. But that sticks out initially. But of course, as Steve said, when we look and see where we are here after that previous little washout day, that gives us a lot of confidence. So whether we immediately jump in with Holly on 100, so we got a little bit of skin in the game, so that we pay attention, right? And of course, we all know how that goes. Hey, well, let's look at this trade later. You don't have a little position in it, so you forget about it. That money goes flying off like the little wings, around the dollar bill stack. Bye-bye. You know, that's missed opportunity. It's better than lost money, but it's still missed opportunity. So let's say we don't even jump in here and take this initial lot with Holly. We're like, okay, when Holly speaks, we're just going to listen, like the old E.F. Hutton commercial, right? So we let this 5-minute bar close, and we notice this little wick, and now this one opens slightly higher. We start getting a little bit of green. We're like, okay, that's the deal. That's the deal sealer. I'm done. I'm taking a position in this with Holly. And then, of course, you get rewarded.
So what you basically did is you let it trade through, you looked around, had some time to think about the trade, watched it, and said if it trades back through that level, I'm in.
Absolutely, absolutely, and that's a pretty easy methodology. Sometimes they're going to go immediately, but as we're going to get to in a moment, a couple of other stocks, everyone needs to remember, and write this down if you have to. The statistical probability is good for the entire day. Now, sometimes the timing is slightly off, and we'll get to an illustration of that here in just a moment. So that was YRD. That was one of the best movers, and Holly pretty much pegged it perfectly. She got out. She held the whole time. Ended up plugging out for a 77-cent profit. If she would have held it to the close, an extra 5 cents. So not really worth holding that one to the close because she captured most of the move according to the parameters at hand. Now the next one here, we're going to talk about a trade around, and that one, let me just sort by symbol here. And we're going to take a look at VNO. Victor, Nancy, Oscar, bullish trend change. So what were my expectations there? Okay, well I see the bullish trend change, spit out the VNO, and 60% weighted to go in my favor. But now let's look here. And also, before we go to the chart, why did Holly get out of the trade in the first place? We can see she lost 39 cents on risk off, and that was one of the 2 stocks today where the stop was triggered. So we can see right here, I've already marked this up for everybody, so we can see Holly gets it right here, and look, we're in the money initially. Now, of course, expectation-wise, what are we talking about here? This looks very similar to the
bearish engulfing.
Not quite as pronounced as the YRD, but exactly. So we do have the chance to exit for a profit here, but not by a whole lot. So we'll say 91.89 up to 2. So up here we're topping out. We're in the money by 11 cents or so, and then look, whoosh, back down, and eventually a stop out. So I make it the habit, whether it's a stop out or whether it's just she's red at all. If the price falls below her entry price, it's just common habit now. I'll draw this second line. Of course, this is the line, but what do I really do in the trading day is set a price limit alert by right-clicking and saying, okay, using that same price, I want to know when it comes back through that price, because as I said earlier, the statistical probability is good for the day, but sometimes timing is off. So whether we watched here or took the trade and got stopped out, as soon as it went below here and started heading down, I'm going to go ahead and draw that line, so that later on in the day, when I've probably forgotten all about VNO, look what happens. It bottoms out, it comes back up, it penetrates that area not once, but twice, and then it really goes. So, just because Holly gets stopped out or is down on a position, that doesn't mean that there might not be some alpha hiding in there, and the statistical weight is still there. It's just sometimes they go immediately, and sometimes they sit there and will be down a little bit, and sometimes we'll even get stopped out. But by drawing that second level there and being told about it when it's going back through that price entry, then that leaves some opportunity out there. And this is a way to capture alpha that you may or may not be able to see when we're looking through the Holly reports, because we track a lot of information here, but some of these things just have to be watched after the first or second entry, because sometimes they take a little bit longer than others.
Yep, use your price alerts unless you got 9 pairs of eyes.
Exactly. So let's see. One more trade around here was MIC. So here we have MIC. Here's where the original signal was generated. And of course, this one, we don't get stopped out. And of course, Holly, why did she exit the trade? And we go over here and we look, reduce risk. Well, you know, when we came up with the profit save, it was only logical to, you know, do the other side of the coin as well. So this one never even came close to getting stopped out down here. And of course, when we look at this stock, it typically moves in quarter increments over here. Price action looks a lot bigger, but once again, these are only quarter increments. So Holly's recommending the buy here. Shortly after that, she goes red. And so right here, she's only down about 18, 19 cents. But as time progresses, Holly's going to be more and more apt to go ahead and reduce the risk, even though the stop loss has not been encroached upon.
Yeah, as the time progresses and the time decays, and if the stock stays negative below the entry, the longer it decays below the entry price, the quicker Holly will initiate that reduced risk, which is really a very, very conservative exit to try and really control risk, knowing all the well that, you know, we should be drawing trigger lines again if it gets back through there. So, you know, the reduced risk is just, once again, the AI recognizing that the trade did not go positive immediately and time is decaying and the price for the most part was staying below the entry price. So the logic is, rather than hang around for a time stop, worst price, or even a stop loss, just go ahead and cut your losses. So reduced risk is just another way of saying cutting losses. But here's the thing. A lot of time on those reduced risk trades is another way of saying I was just too early. So we got to make sure that we catch Holly if she was in fact too early by using price alerts and getting back above the same trigger price if it does happen to re-trigger.
Absolutely. And what we're doing here is you know, it's the human working with the machine. It's, you know, Holly is the trader that is trading with statistical weight all the time, consistently, and she's going to err on the side of caution, right? But of course, being in the market and trading, especially on an intraday basis, or whether it's swing trading or not, is an inherently risky business, right? So we've got the conservative statistical model, but using our chart reading skills, which Holly can see charts, but she doesn't read things like we do. She sees things more in a shotgun dot pattern, you know, type of thing. So when we talk about working with the machinery, this is exactly what we're talking about, because, you know, depending on how long you've been in the chair, we take a long entry somewhere right here, and we see it kind of just chopping around in this range. We're not getting all upset. We know our stop loss is down here. You know, it's statistically weighted, and especially on a day like today in the clump inside day, you know, this was pretty prevalent. Took them a little bit longer to get in there, and, you know, when that second and third occurrence did happen, then it was off to the races. So we could have added to our position with relatively super low risk to get this final move here. So VNO and MIC are examples of trade arounds from a negative or a stop out Holly position, whereas the YRD was just simply beautiful right off the bat, and there wasn't even that much left to try to milk out of that trade holding it. So that brings up this little guy right here, ALDR. Now we can see
short. This one's a short.
Yeah. Now Bond Shorty, one of our favorite short strats, coming into the session, 61.1% statistically weighted in our favor. And did we get stopped out of ALDR? No, we did not. That was, once again, Holly getting a little nervous and plugging out for a 20-cent loser. When we can see, I'll have to compress this chart a little bit more so that the stop loss shows up, but there we go. So here we're looking at 5-minute candles. Entry price came here to sell or get short right here at the 25.30 level. Immediately we're in the money, and then it takes a little pullback to the upside and starts consolidating here. So ALDR, reduced risk. Holly gets a little nervous up here and says, you know what? I don't really see any reason to stay in this very much longer because of my time decay reduced risk functionality. So I'm going to go ahead and book a 20-cent loss. But Steve, I mean,
Too early.
we're not even anywhere near. Okay, yes, I know, Holly, you're the conservative one, but I don't really feel it's necessary to get out of the trade because we're nowhere near the stop price. We're in this nice little consolidation.
That little consolidation range could have gone either way right there.
Exactly,
and you could have,
that's
you
what I
could
was
have looked
about
at
to
that and
point
said,
out.
exactly, I knew you were going there.
If it cracks up, if it cracks above that line, I might think about covering with Holly, but if it does not, if it just keeps hugging the top like it did and then comes back down, not only will I hold it, but when I see this level right here or this level right here get penetrated, I might actually go ahead and add a little bit to my position, right? And then we can see all that happened is the seller took a break. When we see this pattern occurring, what's that telling us? Buyers and sellers are kind of equal right now. Now, if we're monitoring volume at this level, through one of the many ways we can do that with TI, probably would have noticed that the volume was normal, if not slightly above or below. And then as we picked up steam here, we get volume increases, right? So once again, a way to go risk on when Holly's going risk off because of what we see and what we're able to read as humans on the charts here. And go, okay, low risk, I don't have any problem staying in this trade, and then we get rewarded. And then we also get an extra opportunity to add to a position, which we all know is not so easy. From a mental standpoint, psychologically, you know, especially if you're kind of new to the game and you're up 75 cents on a couple hundred shares and you're like, oh, when should I get out? The last thing you're thinking about is, you know what? You shouldn't be thinking about getting out. You should be thinking about adding more here and see if we can get proficient at watching Holly and identifying these levels as Steve and I are showcasing, then eventually you'll be able to make those decisions without a lot of thought, you know. As we like to say, if you can draw some horizontal lines and identify some little support and resistance levels, if you couple that with Holly's statistical probability, then good trading will ensue, and we all know what the byproduct of good trading is, and that's called cash.
Yeah, it's a position. Cash can be a position.
Yeah. Okay, so, you know, kind of a light day for Holly, but that's what we like to see on a day like today. If she would have spit out 100 trades, I would have been like, you know, why is this happening? But she pretty much performed within expectations today. Nice statistical data set. Risk off 106, risk on 199 for a day like today. That's about all you can ask for.
Hey, I've got something I want to show him. Why don't I take it back for a minute?
Sure.
All right.
You got it?
Okay.
I
can do it myself. Okay. So, back to entries. Entries are where all of the trade is set forth. If you have a late entry, you're pretty much on the chopping block for a pullback and trying to weather the storm on those, and we've all been there. But another way to take an entry is to look for, you know, again, the contrarian, like I was speaking about earlier with Holly, is the contrarian type trade. Now I'm going to open up my, I'm going to expand my daily chart here, and we're going to talk just a little bit about trade of the week. We're going to expand much more trade of the week on Monday. But when the markets gets kind of dicey, a couple of times we've gone to this trade of the week scheme, for lack of a better word, of trying to get ourselves a decent entry where we can withstand some noise. And one of the best ways to do that is to look left in the chart and find gaps that need to be filled or levels of interest. This was a particular trade of the week a few months ago back in Facebook, worked perfectly. So we're back in this kind of volatility again, where when we go into the weekend and look at our trade ideas data and try and curate some good calls that the technology is showing us, you know, we can either gravitate towards breakouts or we can gravitate towards something a little bit more of a pullback. And by getting the R price on a pullback, boy, you know, the staying power can be so much easier. We did Yelp 2 weeks ago, and Yelp did a funny thing. Yelp did what we call kind of a double dip, and I talked about that last Wednesday night. The green trigger here was the actual price fill of this gap. So what we're looking at here is a stock in a wonderful uptrend but got some sort of issue behind it that it needs to work on, and gaps can usually be those issues. A lot of people say gaps were meant to be filled. So in this particular case, the green line was an open alert for trade of the week, and it took, I think, 4 days before trade of the week got live. I believe this was Monday of the first day. I saw a few people take the trade, but if they had read the email was to wait for the price action to fill the gap. And so as it dastardly does so often, gives us that false hope on that one green day, and then a reversal wick down, and then fill the gap. So Yelp from 2 weeks ago basically is alive. The trade is open and trading just pretty much right here where the entry point was. There hasn't been a whole lot of pain for these types of trades, pullback trades. Think if you were this guy here buying the old school. He read in a book in 2001. This was the type of the pattern he was supposed to buy. But maybe he didn't read much about risk management and stayed through this and stayed through all this. And before you know it, he's in extreme pain. Well, we can find levels of other people's pain and make those our opportunity. But we got to find levels in the sand, the footprints in the sand that make sense. So Yelp is catching up nicely from last week. Hope to see it build on that. This week we did the exact same thing. We did it in Vonage. Vonage had earnings behind us, which was one reason we like to get that out of the way. So we had a real nice pro gap, well, not a pro gap, excuse me, but a real nice earnings gap, got way ahead of itself. Somebody up here actually purchased the buy button at 750. And we don't want that to be us because, this is just typical. When something gets stretched like that, it's going to pull back and it's going to want to be like a guitar string after you plucked it. What we did here is just basic 101. Prior resistance can become current support. There's no reason that this prior resistance that Vonage broke out from couldn't be a support level to give back a little bit too much of what got ahead of itself up here while still intact, keeping the nice gap up from the news that was weighted towards good earnings. 3 days of 1, 2, 3 red candles, and what do you know? This thing triggered today to just about the penny. If we look at the intraday, the trigger price was 475. Guys, I don't know how much more pain you'd want to take. That was only 2 cents of pain for about a minute or two. So when you get these levels right, it's so much nicer to create this entry and give yourself staying power for a longer term trade where you're not feeling like you're always being shaken out. The guys who are buying late up here, they're always being shaken out. But if you can find the level after the smoke settles, and find a place that makes sense, and usually gaps make great sense on the daily charts, that's where you can get some interesting entries. So far so good. I don't want to jinx it, but the Vonage chart did exactly what we had hoped it would do, and it was an exact example of how to use pullback alerts and identify these types of levels on charts. And before I give it back to Jamie, because we are going to look at a few things, I want to show you how you might be able to find some of these. And not only that, you guys know the trend change lubricant has always been a very interesting scan for us. There's only 3 stocks on there, and 2 of them are going to be interesting to us. But we have its upside down brother, the flipped version, the trend change, which is looking for stocks that are going up in trend, but getting ready to make a new 20-day low and break that trend. Okay, I haven't seen this list this long in a while. So step number 1, kind of interesting. These are our long setups.
Extremely long.
These are our short setups. Yeah. I've not seen this many setups show up in the trend change lubricant downside. Mm-hmm. So point takeaway number 1, keep this in the back of your mind. The IWM I showed you earlier was starting to fail. Stocks are starting to crack beneath the scenes that maybe the indexes aren't seeing. I'm not sitting here predicting short, but I'm noticing ideas and trying to help you guys recognize your own red flags. But then going forward, what I was just talking about is, this is an actual decent alert that can be used to try and find these types of setups that I've been looking at. For the one, I've got a couple of quick examples here just before I pass it back. Where is it? BCO or MASI was a decent one. Let me just find MASI. Where'd they go? Here's Massey. Okay, so what we got in Massey here is kind of the upside down trend change reversal, but this thing's still making an uptrend. Probably got ahead of itself, big rounded top, but oh my, is this a juicy gap, and it's almost starting to fill it. It's quite possible it doesn't fill it and it just moves higher, but if it does fill it, I have used my handy-dandy price alert here with this red dashed line to try and find that point in time that if Massey does pull back and tag a close on the opening gap, guess what? I know about it because my price alerts are going to pop up and say, hey, you were looking for that. What do you want to do with it? So this trend change lubricant flipped can be a great way to look for these types of setups. Let's see, there was another one I had, what was it? B-Cove and AAOI. Let me just see if I can find it. Well, let's just search by symbol AAO. Oh, come on, Steve. AAOI. Okay, another obvious level here. You can see my price alert is set. We're close to possibly filling a gap. Nice uptrend. This chart might need to just breathe and work off a little steam, but these can be great levels to be notified using price alerts. And then last one was, what was it, B-Cove, right here. So 3 quick examples to kind of show you. This one's had a real big fall. It might even congeal a little while, but at some point it may want to revisit this open space back here. So just a quick example to show you how you might be able to find some of those pullback alerts that are looking like Yelp and like Vonage was to us over the weekend. The trend change lubricant flipped is a decent one. And I imagine, without even looking, is somebody asking for it? We'll go ahead and put it in there. I'll drop it in the chat window for a cloud link if somebody wants to expand on the numerous red alerts in there for possible pullbacks. All right, so where is the search function to search for pullbacks? Well, there's no search function. The code that I just dropped in the chat window is this particular scan right here, and I'm just showing you this is a scan that looks for stocks that are in uptrends but are getting ready to roll back and maybe find a possible level to bid into. So that's how I've been using that particular scan lately. It's not located in one of the channels, but yeah, Bart, I just did plaster it into the chat window, so all you got to do is right-click, save link address, and then you can load from your cloud and then save from the cloud, and you've got an exact copy.
Hey, and while we're on that topic, instead of me typing a long sentence over here, I was just tell Bart he needs to find an alert window or a top list window, right-click, configure. That's how you get to the search tab.
Okay, right-click, configure in anything, and that takes us to the search tab, which is the greatest place to go. What does Trade Ideas offer for Bollinger Bands? What does Trade Ideas offer for RSI? What do they offer for standard deviations or volatility? Anything you can think of, type into that search window, and you're going to get a nice drill down, breakdown as to what is available to be used. You know, there's a lot of stuff that you can use within the confines of the Trade Ideas platform. So configure any single window, and that'll get you there. Basically, top list is going to be nothing but filters, because that's all a top list is filters that refresh every 30 seconds. And then you've got your alert windows, which actually spit out a time stamp and a price stamp. And on those configure windows, not only do you have your filters, but you've also got your alerts that you can look for as well: highs, lows, cross above, algorithms and events, things like that. All right. Let me get it back to you, Jamie, and then maybe we'll set up a couple of alerts and share for those that want it.
That sounds good to me.
It can be used for both, Michael. I find both swing trading setups, and I also find day trading setups on here.
Right, without going into too much detail, we try to dispense with day trading versus swing trading. I mean, it's all trading. The first part of the equation is our entry signal, which we all have to like, and then to decide whether we're going to stay in it overnight or for several days. As Steve says, what do? We look to the left on the daily, because that's how we derive expectations as to how much room is there. Is it bumping up against resistance? Is it bouncing off support? Right? Yeah.
Just trading alone on a 5 or a 10-minute chart by itself is like driving down the street with your hands over your eyes. You need to be able to see the neighborhood.
So. Yes. Okay, so just keeping an eye on the time here. We do have a couple of setups that we'll drop into the chat window for everybody, for those of you that have the price alert functionality, of course. So I believe, Steve, you've got a couple of restaurant chains on the radar screen here.
Yeah, I was just letting Jeff know that that trend change lubricant flipped really hasn't worked well for shorts. I've tried it a few times on my price alerts, and they don't really seem to follow through, so I'm not comfortable with them yet, and the shorts in this market have been very difficult, except for some of the momentum trades like wait for the 8, which is a pure momentum type play. So these, at some point, these are going to work a little better, but for now I haven't been trusting them that much for breakdowns. I've been using them more for the pullback.
Right, and
All
what
right.
Steve and I were noticing before this webinar began is that, on the reverse trend change, we'd see patterns like this, but they've already went. They've already, pretty much the
Five,
show's
6 days
already over.
of
Right.
downside candles,
And
yeah.
it's just a lot of people, we can't set pullback alerts to get short right now. It just doesn't make a whole lot of sense. So, having said that, we do have this little guy today, Zoe's Kitchen, Zoes, and I believe we were just talking the high of this range, Steve?
Yeah, it had a really nice breakout today, quite honestly. If you look at the daily chart, which we should do, of course,
Right.
it kind of had its day today.
Mm-hmm.
Now, you see how it broke above that little hitch a little bit lower, so he's moved the orange bar to today's high, but it hasn't moved that far. But
No, right. I was looking at the wrong chart initially.
Yeah,
So,
that's a beautiful daily chart, basing, putting in a higher low, moving sideways, and moving higher. Now, here's the real kicker. What's the short float and what's the circulation float?
and there we go. We got a short float, 32.5%.
Which is very large. On
And
how
the
many
float,
shares?
the float's only 19 million
It's
shares.
under 20 million, very short. This is a recipe for a short squeeze. So,
Yes.
knowing that, you have to actually put an extra star on this one. This is a great-looking chart. It did trigger midday because it kind of cleared out, but it didn't get that far, and I don't think it would be a bad idea for us to go ahead and put a secondary alert on the highs of today, because we know that if the shorts are going to come home tonight from work and say, oh, jeez, if I'm not the first guy to get out of this thing, I might have to suffer a massive short squeeze, 30% on 19 million shares. These guys, they're not getting the price action they want based on the footprints in the sand, so I think that's a valuable alert to set at today's highs, and let's do it. And
2279.
as he will do, he will remind himself where he found it. Because when this alert goes off, you're like, what just happened? Oh, yeah, it's trend change lubricant. Okay, great. And, oh, yeah, that's right. It's 32% short on only 19 million. That's some really sweet setups on the configuration of a short squeeze. So, it's important to put your notes in there. Otherwise, you just might look at it, your mind might be on something else, and you might dismiss it. So, the better the notes you can give yourself, the better. I wouldn't be surprised if this thing does not trigger tomorrow and try and do some follow through.
All right, and then next on the block is this guy right here, Chewy.
Well, Chewy's a great example of a stock that went. So where would you guys identify the pivot level that we could use for a possible pullback alert? Well, there's no gap like we were doing earlier, but what at the high end of that little wick there a week ago corresponds exactly, take it up just a little bit, I think, because the high end of that wick, yeah, it basically corresponds to that dip way back there under the comma in Chewy. So there's a pivot level established. We just broke out through it. Buying follow through tomorrow, you could go either way. It depends on how you want to do it. You could even bracket it. But the first price that he put in there is a great pullback. That's the kind of thing that could try and pull back in the first 15, 20 minutes of the day and run the stops and trigger an alert that says, hey, the stock is quickly pulling back to the level from which it broke out, which in fact is a major pivot level, looking at the support back there earlier mid-chart. So, you could go either way on this one. It's had 4 green candles. It may need a rest. I'd be inclined to let it, at least maybe pull back to the first one, 2778-ish. But if it wants to follow through, hey, more power to it. But that's another interesting looking chart. And again, like Jamie said earlier, it's machine working with man. We're telling the machine what we want to find. The machine is giving us the setups that we want to find, but it's up to us to determine where to make them trigger and if we want to take the trade in real time.
So what do we have on this one? We've got a short float, not quite as big as
Not
Zoe.
as big, yeah. That's why I'm more inclined. See, if it was like a 40% short at the float, maybe I'd be more inclined to chase a new high tomorrow with the short squeeze being the catalyst. But it's kind of in no man's land there. It's not a huge short float. Let's just see if we can get tricky and maybe catch a pullback.
All right, so we're looking at what, 2783? Does that look good or a little bit lower?
That's
That's 2781 right here.
I see the top of that wick. The top of that wick from 6 days ago.
1, 2, 3, 4, 5, 6.
Yeah.
This guy right here? Okay, so we'll use
Top of that. because
76.
that
Yeah.
corresponds really nicely with farther left with sideways support and then a dip support. And that's all you do when you find a pivot level, guys, is find the levels where the price trades around, where it once was support and then becomes resistance.
Float and trend change to rent daily. All right. Okay, so as far as the trend change type setup, Steve, that's really all we have because the pickings are slim.
Yeah.
As we can see, here's the long side, which those are the only choice candidates that we really saw. Tons and tons of stuff on the flip, but they've already gone. So
we've only got one more for you. I mean, rather than spit out a bunch of trades that are C minus, C plus trades, we'd rather be a little picky and look at the ones that we like. So this one is a familiar name, CWEI. And what CWEI did on the daily chart is pretty cool. It did kind of a washout bounce. Look at everybody that bought the breakout 4 or 5 days ago, just like the book told them to do, that they bought back in 2001. And I'm being very sarcastic when I say that. Those books don't really work anymore, guys. The market has changed a lot since 2008. So trying to be contrary is an interesting fashion. So what CWEI did today was put in a really nice washout bounce. That's typically the washout bounce. However, it did at midday. It didn't do it all at once. So it was some selling and then some buying pushed it back near highs. But the secret sauce on this one has just been working off 70% short the float. Last time it was 50%. It's finally working itself down into the 40s. I think it's 44% short the float at the moment. So this thing is still nasty for the people who want to try and bring the price back. And the way it just dug in on a washout bounce like that, I'd be inclined to watch it through today's highs. Just whatever today's highs were, if it wants to follow through on that, the washout bounce is typically a nice 2 or 3 day swing trade. So for those of you who asked earlier, is this just typically swing trade? Well, this one did not come through any of my scanners. It just came through kind of my wheelhouse because I've been watching this stock. But on a washout hammer bounce like that, and if it closes like that near highs at the end of the day, that's typically for me a go for a swing trade for a couple day hold, and that's about it. So this one wasn't picked up by any of my scanners, but it was just kind of picked up by discretionary, keeping an eye on things that have been in motion. But the general idea is still the same, kind of a washout bounce. You just picked up the shares that everybody that bought above that orange line bought because the old school book told them to. They put their stop in because that's what their broker tells them to do, and then their stops get run over because their brokers sell their stops out to the HFT.
So you can be the person getting long when everybody else is getting stopped out.
Getting sold out by your broker, yep. And then that one morning where they just wash out all the obvious stops, if we can identify that as being somebody else's pain and turn that into our gain and our opportunity, then more power to you. But that's just, again, a way of trying to think contrary, like the example I gave on Holly earlier, not buying the first breakout, but buying that pullback as they tested lows, being contrarian in your entries and your exits. You want to scream and shout and put your hands up in the air when the stock goes to highs, when in reality, you might want to be selling a third or a quarter of it. So keep that in mind.
Absolutely.
It works on both sides of the stick. All right.
All right, very good. So I dropped the cloud link into the chat. So for those of you with the higher functionality, grab that link, load those price alerts up, and you're good to go. And I can see we have surpassed an hour. So I guess we should probably bring Scott in. Let him discuss all the or the end of the Halloween special that's going on here and any applicable codes.
Yeah, I just want to thank everyone who participated in that open house the other week. That was successful and really everyone had a really great time. And we had a lot of people, well over 400. I think we had over 500 join us to sample premium. We are offering that 20% off of the first month or year of premium or 15% off the first month or year of standard through tonight. In other words, you can get your first year of premium and save $370 on that. The code Haunted House expires tonight at midnight, so get ahead on that. You can download a handout to remind you of this. go to the handouts panel on your GoToWebinar interface and click on the little plus next to it to expand that. There's also a link in the chat that'll take you to a page that reminds you the exact same stuff, but just use that code Haunted House all caps on checkout, and you can save nearly $400 off your first year. So again, the major difference between premium and standard is the access to that higher functionality, the new stuff, where the technology is going, which is the artificial intelligence engine Holly, our unlimited backtesting with the odds maker, advanced windows like the red bar ignore and green bar ignore, and also shareable price alerts and stuff like that. So get on that. If you have any questions, email us info@trade-ideas.com. Follow us on Facebook at Trade Ideas Pro at facebook.com. Steve Gomez is Today Trader, Jamie Hodge is QuantBot, and Dan Merkins Trade Ideas 1 on Twitter. You can reach out to us, Jay Hodge at Trade Ideas or Steve at Trade Ideas. Those are their email addresses, but the info@trade-ideas.com is the general help email address for if you have any questions. There will be a recording list available later tonight or tomorrow morning, so thanks everyone for joining us. You can watch a replay then. Thanks all. Thanks, Steve. Thanks, Jamie. And keep tuned for the other webinar invites that will be going out tomorrow morning and during the day. So we have a Trade of the Week webinar on Wednesday for those of you on that list, and a QA webinar before that in the afternoon. And then on Thursday, another educational webinar, Trading Studio, hosted by Andy Lindloff, featuring Jamie Hodge. So see y'all in those. Thanks, guys.
Thanks for popping in, guys. Everybody have a great week.
Yeah. Bye, guys.